Welcome back to another roundtable. My name is Adam. With me once again, I have Rusman, Victor.
Hi everyone.
Thank you for joining us. Today we're going to talk about 3 things that you need to do when you make a big investment mistake.
Yep.
So right now, I think markets are down. Some people may feel that they've made a mistake, and some people may feel they haven't. All right, and I think this part of the conversation that we're going to have is how do you know whether it's a mistake, and if you have made a mistake, what do you do? All right, so we're going to discuss all these things and the 3 steps that you need to kind of like do when you make a mistake. All right, so
I think the first thing is you must admit your mistake, right?
Okay.
So that's basically the first thing. But then how do you admit? How do you depend that is it what kind of share price fallen? Is it a mistake or is it the fundamentals, right? So at the end of the day is when we say mistake, right, is when the fundamental deteriorate from the first day you buy into the company, not the share price has fallen.
So you're defining what a mistake is.
Yes,
right
correct.
Okay.
Right. So but then at the end of the day, it's easier said than done, right? It's not easy to admit a mistake, but then sometimes as an investor we have to admit the mistake. I think to date I'm still learning about this, right? And sometimes I still do make the same mistake, but then I try to be more conscious about this thing, right? Because a lot of times, a lot of people they don't want to sell the company because when you sell the company, you are accepting your mistake and you're also accepting the losses, right? But at the end of the day, we must think in terms of opportunity cost, right? So for instance, let's say the company you invest, let's say example 10,000 and you make a 50% losses, so you make a 5,000 loss, right? And if you let's say example you continue hold, right, the next 10 years, the company may go down further and it may not recover back to your $10,000, right? So because the fundamental is already deteriorated. So at the end of the day, my take is you can lose some money, but you cannot lose time. Because if I were to realize my mistake, get the $5,000, and for the next 10 years I invest in a good company, and the next 10 years the $5,000 grow, I can earn back my money, right? So you cannot lose time because you cannot buy back time.
Yeah, that's it.
But your money lose, right, at the moment you can be down, right? But you have time, you can gain it back. Right, so that's the most important thing. I think Rusmi have an example on this opportunity cost.
I have a lot of example of my own mistakes. Okay, which one to begin with? I don't know, right? But the biggest one, I think we all will remember, right? It's usually very painful, and typically, when I talk to people who have lost money in certain investment, they were like, "I'll just leave it there, maybe one day it rebound." Or sometimes in the case where the amount has become too small, it doesn't make sense for them to cash out anymore, right? So that's usually people don't admit that it is a mistake, or rather they already write it off, off their mind. Okay, so people don't really like say, "Oh, I made a mistake," right, and then just set it off, right? But usually it'll be a bit too late sometimes, right? But there are cases where you can still catch it before it get worse, right? So I think personally, I have invested in a shipping company, I think back in 2012, 2013, right? So, and back then, I think the thesis for shipping was basically a turnaround story, right? And the dropout index, basically the freight rate, right, index has already dropped 90% at the time due to oversupply situation. So, if the index already dropped 90%, how far worse can it get, right? So I went to use my fundamental analysis skill and look for all the best shipping companies in the world, and then we concluded that okay, this company, Malaysia bulk carrier, is able to withstand that crisis, and then we put the money there, and then fast forward 5 years later, that position down by half, despite all the efforts that we researched, understand the whole industry, right? And then as I look back, actually the industry is not easy to understand, right? And there are a lot of moving parts, and one is of course we thought that it's a break-even price rate, the freight rate that they're charging, but then with oil prices drop, the break-even price is even lower for those people who just enter the market. So that is actually constantly moving, and of course supply side, there are a lot of people with money can just come in. Everyone was expecting a turnaround to happen, but then you have more supply, which get worse. Right? So that actually teach me a lesson that commodity industry is very difficult to be in. So I just out and then write it off and move on, right? Because if I were to hold it until today, that position is not going anywhere, and in fact it gets worse as time. So it's already been almost 10 years. Right?
I mean, if you held it until now,
you've held it until now, right?
Compounded the mistake some more.
Yes, I lost the time and I lost more money along the way. Okay, and this is what happened exactly to someone that close to me. Okay, she invested in this company called DIVIDEND, right? Listed in Singapore back I think in 2007, based on stock tips. Okay, which is what a lot of investors did back then. They usually listen to stock tips from.
You're still listening to us.
we weren't there at that time, right?
Yeah,
Otherwise,
I mean, of course, do your own due diligence. No stock tips on this channel.
So she invested about $20,000 and based on stock tips, and then she held on until today, right? But back then when I went to look at the fundamentals, as I went back to the annual report at that period, it's like shit. There's no fundamental, right? But because she doesn't know how to do all this kind of analysis, she just hold on to it, and the value already dropped like 98%. So, so she just leave it there, right? Because it's a mistake. Okay. Right? But then there's nothing that she can do. She should have do it earlier, right? But then it's been like almost 15 years more.
I think that's the thing, that if you don't accept that you made a mistake, you just kind of like it gets worse. You know? Because I think sometimes I get the point where it's down 98%. There's really no point.
Yeah.
Sometimes, like, I guess maybe crypto is an example right now, right?
Yeah.
You know, it's gone to nothing. I might as well leave it there and maybe one day, hopefully, you know, one day. You don't know, but it's like a lottery ticket in a sense, all right? But the thing is, sometimes you can catch it before that point, but that requires you to acknowledge that, yes, I've made a mistake, and then I get out. But some people have gone down like maybe 20-30%, and they go like, it's fine, and they like ignore it. It goes to 50%, it's fine, and 60, so I don't even know it's there, and it goes to score.
So again, back to the Victor point, right? Mistake is not always like, you buy in the stock and then the share price drop by 30%. Oh, that's a mistake. No, that is just a volatility, right?
Don't like Victor says, fundamentals.
Don't confuse volatility with risk, right? Risk is the permanent loss of capital, right? So the only way to judge permanent loss of capital, you have to look at the fundamental of the company, and if the share price dropped 20%, you look at the financial result. Hey, look, they are not doing as bad as what people think, and just because of the sentiment has changed, there's a lot of politics involved, like what happened with the Chinese tech, right? Then of course you don't get confused. That is actually a mistake. So that is something they need to review. But then if you review it and then you realize that fundamental has deteriorated, like in the case, let's say for example advertising, right? So let's say if you invest in a traditional newspaper, SPH for example, right? And you know that Facebook, or rather better Google back then is taking away a lot of digital advertising market, and that actually disrupted the way how information is being disseminated. That it's not a overnight fall for SPH. Right? It's like slow and steady. You can still realize it along the way. Even if you are late 2-3 years later, you probably have more losses. But if you cash out only like 5 years or 10 years later, you have more losses.
That's a good point. So sometimes it's not a cliff.
And I like
it's a slow death sometimes.
So. And I like this saying by Warren Buffett, right? You don't have to make back the way you lost it, right? If you lose money in that stock, you don't have to hang on to that and then keep hoping that one day you come back, okay? In fact, you can just cut the losses, whether how many percent, 50, 70%. You take the money and then invest in better quality stock, right? That, passes your own criteria, and you hold on to them. You may eventually get back the money that you
because you lose money, you go back the fund, but there's a chance that you can come back because of the time to let you compound. But once you lose the time, it's very hard to come back.
We only have this amount of time.
Correct. All of our life are limited, right?
All right. So I think the first step in this process, I think, is actually the hardest. Which is you have to accept that I made a mistake.
Correct. It's really a mental blockage. Man.
And mistakes are going to happen. No one's got 100% in investing. Mistakes are inevitable, right? So that's the first step, So once you've accepted and acknowledged that you made a mistake, what's the next step?
I think the next step is to really reverse engineer the mistake, right? So you look back at the company, why do you lose money over here, right? You lose money because of sentiment, or you lose money because of fundamentals, right? So at the end of the day, we have to learn from the mistake that we make and do our best not to repeat the same mistake, right? So that's the most important thing.
So just to give example on this is like, if you have invested in Chinese tech like us, right? So second half of last year, you probably caught in the perfect storm, where regulatory, intensify, and then there's a lot of politics being involved between China and the US, and a lot of stocks have fallen by the big Chinese tech have fallen by more than 50%. Okay, since late of last year to now. Okay, so whether is that a mistake is still yet to be known, because Chinese economy has a major slowdown because of zero COVID policy. So there is a challenge when it comes to acknowledging a mistake as well. Okay, there's a very fine line between having a conviction and being stubborn. So this fine line is, I think, what every investor will go through, as even for us. And what usually the case is like, for our case, it's very clear. We have very strong conviction in Chinese tech, right? But that could turns up to become a mistake 2 years, 5 years down the road, if let's say China's economy continue to be weak, or CCP is really
destroying the business,
and they are closing down the country, and it's going back to the olden days, right? So that is eventually may turn out as a mistake. So the key thing here is, of course, for now, when we look at the fundamental of Chinese tech, they are still doing okay. They are slowing down. They have slightly making lesser profit as versus before. Okay, but the price drop is way too much. Too much of sentiments are being involved here.
All right.
Yeah.
So I want to say Chinese tech is still, I wouldn't say it's a mistake. You have a different point of view. But I want to home in on a mistake that you know that it was a mistake. So like you said, shipping.
Clear case is
a mistake. So how did you reverse engineer, or how do you know what went wrong? How did you find out?
So basically, I looked at it, and then I went back, and then as I followed the industry, and then there are actually more things being unfolded, and more things that I'm not aware, like in the case of oil prices and then supply, where everybody also looking at the same thing, and they pump in more money. The private funds, they actually bring in more supply in, because everyone is expecting that there's going to be a rebound, but that actually makes it worse. And the thing about the commodity that I learned is that there's no differentiation point. Everyone fight by prices.
I think their mistake, which I also made the same mistake as Rusmi. I think the one thing that you can learn is that, again, back to supply demand, because what at the point of time, what we're seeing is we are looking at demand. We say that now it's the lowest, later just a bit of demand, the share price will go up, right? But at the end of the day, it's not about the demand, because demand is very hard to predict, right? But supply is easy to assess, right? Because from the supply, you know that as long as the supply shrink, there will a bit of demand will push up the business already. But at the point of time, instead of the supplies being cut, right, the supply continue to increase, because like Rusmi said, everybody thinks that it's the lowest, I go. So that actually make the problem to become more serious, and which is in return drag down the whole industry further. Right. So that's the case. Don't look at demand, but focus on supply.
Right? So basically, you have to follow the companies that you invested and the key trend, the business trend in the business itself. And if it's changing structurally, obviously you want to switch out, right? Again, come back to the advertising business, right? Traditional ads has been disrupted, right? And by the digital ads. And of course, if you see that trend changing, is very fast, but I mean on the overall whole market, it's actually very slow, right? And over the last 10, 20 years, you would have spotted it if you follow the trends and you know what's going on. But of course, if you're not reading news and all that, you might just don't know what's going on, and then you realize, hey, look, all the position is down. You don't know what's going on, right? So you need to keep updated with the company at least once a year.
And you kind of need to know where you went wrong,
how
you went wrong.
Yes.
So that you cannot get takeaways from it. So you don't want to repeat it again.
So every time when you get takeaway from all these mistakes, you realize, then you start to improve your process, right? I think one way to improve your process, which is the third point, is to actually have a habit, right? To write down the reason why you buy into the company, right? The moment the thesis change, right, then you know that, I need to sell this company regardless of what happened. The share price down 50%, 60%, 70%, sell this company. And the thesis is one part. The next part is also you must, based on your understanding of the business, right, list down the series of risks that may happen to this business that you will sell. So you in advance
those are your deal breakers.
Yes, correct. So because a lot of people, they just buy, and when the thing happen, they assess, they say, just see what happened. But if you return it beforehand and say that I when this happened, I just sell. So then you will be very decisive on doing the.
So you're not like moving goalposts. It's
Yeah.
like this is my red line. If it crosses that,
Yes.
I'm selling. I'm just moving to the next opportunity.
Yes.
Because there's so many stocks in the world.
Yes, correct.
Right.
So let's go back to the China tech case again. So when we bought into China tech, because what a lot of people think is that the government is going to regulate the whole industry and they're going to probably destroy the business. But our take is that the Chinese government, based on the past track record, we see how they regulate industry. They didn't really destroy it. Yes, they do destroy business, but depends on the business how harmful it is to the citizen, the society and all this, right? So, but our bet to this is that the government won't destroy Alibaba, won't destroy Tencent. But in the event where 2 or 3 years down the road, we realize that the Chinese government is really destroying their business, which will affect the sentiment, which in return, the sentiment won't flip back. Then we will sell. We will realize that mistake. So that is the thesis before it happens, but we set the rules over there.
Got it.
So the moment it happens, regardless, we have to sell.
Okay.
Right.
Yeah.
So you're not hung up about making sure that this is right.
Yes.
Yeah.
You're not there. You just have a set of rules
Yes.
for engagement.
Yeah.
Yeah.
This is what I think is my case.
Yeah.
And this is where my case goes wrong.
Yeah.
I'm out.
Yeah.
Yeah.
That's just it.
Yep. but at the end of the day, as much as we make a mistake, but we also must know that sometimes investing there's an element of luck, right?
Yep.
So I think there's this book called Thinking in Bets, right? But there's this book on Amazon that's called Thinking in Bets. I think they actually mentioned that the process, right, and the outcome is not the same, right?
Mm-hmm.
So sometimes the process of you analyzing the company is correct, right? But at the end of the day, the outcome can differ from your process is because there's an element of luck that destroy the business, right? So back to the shipping case again. If at that point of time there's no private equity pumping more money in, the supply going to reduce, the whole industry going to turn. But at that point of time, that was not the case, and that is something that is very luck, and we got no control over it, right?
Okay.
Right. So that actually hurts the outcome.
Yeah.
Right.
So
it does not mean that your
Yeah.
process is wrong, but your process may be right.
Got it.
Right. So you must be very clear on that
Yeah.
process thing.
Yeah. So as an investor, I'd rather being lucky than being skillful.
I think Napoleon has a very famous quote. I'd rather have a lucky general
Yes.
than a good general.
Something
like that. I remember it was like that.
But of course, the thing is, we can't choose.
You can't
when it comes
control
to
luck.
luck, right? So the only way you can improve your luck, of course, through strengthening your process.
Yeah.
Keep fine tuning.
So you increase your probability of success.
Yes.
Correct.
Yeah.
So those are the 3 steps that basically, I think it applies to anything.
Yes, correct.
I think maybe not just investing, in general.
Yeah.
You got to accept that you've made a mistake and then reverse engineer that mistake, find out where you went wrong, how you went wrong. And then of course step 3 is to improve the process because you don't want to repeat it. That's basically it.
Yep. Correct.
Yeah, and we've shared some of our mistakes as well. We, it's not like we always get it right. We want to get it right more than wrong. And of course, when you get it right, you're going to win a lot more. And let the winners run, basically.
Correct.
Yeah. So I hope this is really helpful for you because mistakes are inevitable. They're going to happen anytime. I mean, not anytime, and they will happen.
They will happen. I guarantee you.
Yeah, they will happen. And it's how you respond to them that's more important rather than whether or not you make them.
Yes.
All right. So if you're in the middle of this bear market and you're wondering whether you made a mistake, you go look back, in your portfolio. Do they still stick to the fundamentals?
Yeah.
What is your thesis? Is it really a mistake or is it just, like you said, volatility?
Yeah.
Find out for yourself, do your diligence, and then, of course, go through your process and decide for yourself.
Yep.
All right. So I hope this was really helpful roundtable for you guys. It's good for us as well to talk about mistakes once in a while. And then I think that's a pretty good wrap up.
Yep.
All right. So my name is Adam. That's Rusmin.
Thank
Victor.
you.
Thank you.
Thank you so much for joining us. Any questions or you want to chat, just put them in the comment section. Of course, if you like this roundtable, hit the like button and of course subscribe to our channel. Many more roundtables coming up, and we'll see you around again.